So ready to start? சார் வணக்கம். ஒரு நீண்ட இடைவெளிக்கு பின்னாலே அனைவரையும் வலையொலி மூலம் சந்திப்பதிலே மிக்க மகிழ்ச்சி. உள்ளுவதெல்லாம் உயர்வுள்ளல், மற்றவை தள்ளினும் தள்ளாமை நீர்த்து என்றார் வள்ளுவர். எண்ணங்கள் உயர்வானதாக இருக்கட்டும், அந்த எண்ணங்கள் ஈடேறலாம், இல்லாமலும் போகலாம். ஆனால் எந்த சூழ்நிலையிலும் மனம் சோர்ந்து போகாமல் இருக்கும் என்கிறார் வள்ளுவர். பொது சேவையில ஈடுபடுகிற போது நம்மை போற்றுவார் போற்றட்டும், புழுதிவாரி தூற்றுவார் தூற்றட்டும் என்று மாணிக்க வாசக பெருமாளின் அருளுரையோடு இந்த நிகழ்ச்சியை தொடங்கலாம். A very pleasant good evening to all my professional colleagues. I take immense pleasure in welcoming you all for the first webinar after I took over as a chairman of the Coimbatore branch of the Institute of Chartered Accountants of India. As we are all aware, the COVID-19 has thrown human life out of normal gear and we are experiencing something that was not there in the history of human life. There are several circulars and notifications issued by the central government of India. Since the outbreak of COVID-19, we thought that it would right and fit to have a webinar on the title Recent Amendments in Corporate Laws in Pursuit of COVID-19 to understand the intricacies of the same. Sri C.S. G. Balasubramaniam, FCS Company Secretary, Roots Multiclean Limited, Coimbatore, is a familiar speaker for our Coimbatore branch. I take delighted in extending my welcome to him. We welcome you, sir. And also welcome our Vice Chairman of our branch, Sri S. Prabhu, and our Honorable Secretary of our branch, Sri N.V. Palanichami. I welcome you, sir. I am sure that today's session will be of immense help to us in understanding the various circulars, notifications, and amendments brought in by various legislations. And I especially thank to coordinate this program our branch staff, Sri Mail Vannan. I thank you, sir. I now kindly request our branch Vice Chairman, Sri S. Prabhu, to introduce the speaker of the session. I offer the session to our Vice Chairman. Thank you, sir. Thank you.
Thank you, sir. Speaker G. Balasubramaniam, SCS Company Secretary of Roots Multiclean Coimbatore since last 15 years. Roots is one of the most reputed companies of Coimbatore. He also holds the position of the Finance Controller International Operations of Roots Group of Companies. He has been instrumental in formation of companies in North America, Russia, and handles the compliance management of the company in Malaysia and joint ventures formed in India along with the Slovenian party, JV partner. He also holds the position of the manager, Roots Multiclean Limited Branch, Sharjah, UAE. He has been with the LIC Mutual Fund, Mumbai, and possesses good knowledge on shares and securities, and in fact has written a book on mutual funds in India, which has been a study material for the PhD College of Arts and Science students. His company Roots has presented him 2 awards, one for the excellence in the profession, another for the appreciation of his service. He is also a member of the Confederation of Indian Industries Coimbatore Zone and is a member of part of Economic Affairs and Taxation Panel since 2011. He was the chairman of the Institute of Company Secretaries of India, Chapter 2010, and he was also awarded by the Excellency of Governor UP for having made the Coimbatore chapter the best chapter during his tenure. Apart from that, he is also a member of Board of Studies in most of the reputed arts and science colleges in the Department of Commerce and Company Secretary. To name a few, he is a board of member of PhD College of Arts and Science, Department of Commerce of Sri Saraswati Tyagaraja College, Pollachi, Sri Ramakrishna College of Arts and Science, Coimbatore, secretaryship at Hindustan College of Arts and Science, and also in VLB Janagaman College of Arts and Science. He is also a visiting professor in the TIPS Global Institute, Coimbatore, and Sri Saraswati Tyagaraja College, Pollachi. He's also faculty at the Institute of Chartered Accountants of Institute of Company Secretaries of India for the last 15 years. He also teaches at the Institute of Chartered Accountants of India also. He has authored many books and he's also interested in Carnatic vocal music and has fetched him a prize in Doordarshan also. With these few words, I request our speaker for the day, G. Balasubramanian sir, to take over the dais and address the members on this first webinar of Coimbatore branch of Chartered. Speaker said it's your turn now.
Okay. Good evening, friends. I thank Coimbatore branch chairman, vice chairman, secretary for giving me this opportunity to have a webinar on the recent amendments in corporate laws in pursuit of COVID-19. Friends, normally with the normal flow of business, we find it very difficult at times to keep track of various circulars notification issued by MCA, income tax, GST, etc. That being the scenario, on a condition like COVID, there have been several notifications that has been brought in by the government of India under MCA, GST, insolvency, bankruptcy code, etc. So we thought at this juncture, when people are just finalizing their 31st March accounts, and where in some cases audit have already been completed and in some cases audit is still in progress, it would be worthwhile to share the latest amendments so that we can understand what exactly we need to take up in this balance sheet for the year ended 1920, and then how we can make it better in compliance with the various laws. So that is the idea of this webinar. So that being the scenario, let us first start with the Companies Act. So starting with the Companies Act, may I now kindly request admin to start with the first slide, please. So till we get the slides on the screen. So in today's webinar, what I have planned is, I have planned to have an overview of MCA, insolvency and bankruptcy code, something from MSME, a little bit of GST, and also to look at what is the tax reforms that has come. So though we have named it as corporate laws, I thought in general we will cover all the areas so that we will have an updated information on what has been given by the government for the corporate sector and its performance in this COVID struck time. So can you please go to the next slide? Yeah, this is the first slide I wanted. So if you look at the background and history goes like this. Section 96 of the Companies Act requires every company to hold AGM within a period of 6 months from the end of the financial year. This is, we are aware of it. And the first general meeting will be within 15 months from the date of incorporation. Whereas companies listed in SEBI, that is a top listed companies, they are supposed to hold their AGM within a period of 5 months from the date of closing of the financial year. So in view of the COVID pandemic, the Ministry of Corporate Affairs and SEBI, they have provided various relaxation and clarifications for conducting AGM and EGM. So I will now like to present to you the various circulars that have been brought in by MCA. Can you please go to the next slide? So if you look at, primarily, there are 4 circulars that have been issued by MCA. So now let us first take up the circular that was issued on 8th April 2020, which is named as circular number 14. Can we take up that circular, please? So this circular, which was issued on 8th April 2020, this was giving clarification on the passing of the ordinary and special resolution by the company under the Companies Act and the rules made thereunder on a COVID scenario. So this circular, for the first time, they were quoting various areas and then talking what will be the scenario in which there will be an EGM being conducted when the company will have an e-voting facility, or in a case where the company does not have an e-voting facility, what will be the scenario on this? So when you just scroll out, when you just scroll down to see the circular, the title is saying about clarification and passing of ordinary and special resolution by companies. So when you come down, you will find the circular talking about holding of meeting through video conferencing or OAVM, which is other audio visual means. So the acronym used is OAVM or VC. So when we are conducting an EGM, what will be the scenario and how to conduct it in this case? And then they are bifurcating that into two segments. One, where company which is having an e-voting facility, and where in a company they don't have an e-voting facility. So if you could look at the page number 2, the point A, that is talking about for companies which are required to provide facility of e-voting under the Act. So where they are providing under e-voting. So if you could further scroll down, you will find in page number 4 of the circular, companies which are not required to provide facility of e-voting under the Act. So both the scenario has been covered in this. So this is what the first circular that has come up on EGM procedure under COVID scenario. So let us close this circular and then get into the next circular, circular number 17, which was issued on 13th April 2020. In this circular, the ministry is drawing reference to the circular that was issued on 8th April, and they are talking about the manner of giving notices before convening the meeting and how we can convene this meeting in a better way. All these things are being talked about. So will it be possible to conduct a meeting without passing, without through a postal ballot, or in a case where postal ballot becomes necessary, passing of certain items only through postal ballot without convening a general meeting? So these are all the points that has been discussed on this circular number 17, which was issued on 13th April 2020, which has been presented for your purview right now on the screen. After this, circular number 18 was issued on 21st of April. I request admin to open circular number 18, please. So that circular of 21st April, which was having number general circular number 18/2020, they are talking about holding of general meeting by companies whose financial year has ended on 31st December 2019. So the MCA is saying that on account of difficulties on this pandemic scenario, companies which have closed their books of accounts on 31st December, they can have their general meeting, that is annual general meeting, within a period of 9 months and not within a period of 6 months. So the extension or the normal time that has been given here will be till 30th September 2020 for companies whose financial year ended on 31st December 2020. So this 3 circular played a major role till end of April, because we were all not aware how long the pandemic scenario will last, how it will go further, can we resume normal business or not, till what time the lockdown will be extended or when the lockdown will be lifted. So we had a lot of apprehensions amongst us. So after the 21st April circular, then comes the next circular dated 5th May 2020. Admin may please open the circular number 20 issued on 5th May 2020, which gives clarification on holding of annual general meeting through video conferencing or other audio visual means. So earlier we have been talking about EGM, then we have been talking about the extension given for holding of AGM for the companies whose financial year has ended on 31st December 2019. Now this circular, which is issued on 5th May, tries to consolidate all the earlier circulars and then gives us a scenario how we have to handle the situation of an AGM or EGM, and what are all the way it has to be conducted, what is the way in which it's to be conducted where e-voting facility is followed, what will be the scenario in which the e-voting facility is not being carried out, how come this can be done. All these things are being given in this circular. So this is circular number 20/2020 issued on 5th May 2020 by Ministry of Corporate Affairs. So my dear friends, so throughout today's discussion, I am going to discuss threadbare the 5th May 2020 circular, wherein various aspects have been clearly covered, and then guidance has been given by MCA on how to go about on annual general meeting and the various procedural compliance to be adhered in this regard. So admin, you may please come to the PowerPoint presentation now, please. So what I have done is, whatever is there in the circulars, I have tried to consolidate and then present it in the form of a tabular version in a tabular column, so that on a glimpse of it, we will be able to understand what is there in the act, what is the provision, what is the relaxation that has been given by MCA, and how do we interpret the various aspects of the law and then carry out our professional activities in adherence with the law. So this is the idea of this evening's presentation. So if you could look at, I have bifurcated into two. What is the obligation and what is the relaxation? So the obligation is the passing of ordinary and special resolutions. Okay. So what is the relaxation that has been given? So I'll be referring to the earlier circulars. MCA through circular of 8th April permitted the use of postal ballot or e-voting mechanism to companies to take all decisions of urgent nature requiring approval of members. So excluding items of ordinary business, that is to be noted there, and without holding a general meeting which requires physical presence of members. Then subsequently, companies are allowed to hold EGM, which is unavoidable, because EGM is something which is happening between two general meetings, wherein the business cannot be postponed till the next general body meeting. So companies are allowed to hold EGM, which is unavoidable through VC, video conferencing, or other audio visual means. The acronym used by MCA is OAVM, facility by following the prescribed procedure for conducting such a meeting on or before 30th June 2020. So all these procedures were actually applicable on the 8th April circular till 30th June. Then ministry issued a circular dated 13th April on the manner of issue of notices to the members to facilitate the EGMs with e-voting facility or voting through registered emails, whatever the case may be in this regard. So please go to the next slide. So going forward, extension of timeline to hold AGM. So what is there? So referring to the 21st April 2020 circular, again I'm repeating, companies whose financial year has ended on 31st December, they were allowed to hold the AGM by 30th September 2020. SEBI, normally they are supposed to, as I was talking to you on the first slide, top 100 listed companies, they will hold their AGM within 5 months rather than 6 months. So SEBI has again extended the timeline to hold AGM by further 1 more month till 30th September 2020. Earlier their due date was 31st August 2020. So SEBI has also given a 1 month extension in this regard. So moving forward to the next slide, I am there to tell you the ministry has received various representations from various stakeholders, and in line with the relaxations given under the EGM circulars to hold EGM through video conferencing or audio visual, MCA in its circular dated 5th May allowed companies to conduct AGM through video conferencing or other audio visual means. Admin, please go to the next slide. So in line with the MCA, SEBI, they have also on 12th May 2020 granted further relaxations and issued clarifications regarding the provisions of the listing regulations. So we are trying to consolidate both the MCA circular and then SEBI circular to look at what is there on the anvil. So please go to the next slide. So AGM through video conferencing or other audio visual means during the calendar year 2020. So whatever meeting is to be conducted during the calendar year 2020, the circular issued on 5th May is our Bible now. If you look at the Companies Act 2013, basically does not contain any specific provision to conduct a general meeting through video conferencing or other audio visual means facility. However, the certain companies are required to provide members e-voting facility, which includes listed companies, and where companies are having at least 1,000 members shareholders. So companies which is having less than 1,000 members are not required to provide e-voting facility. Certain companies are not required to follow the e-voting facility, which includes a Nidhi company and an enterprise or an institutional investor referred in SEBI ICDR regulations 2009 and 2018 regulations. So barring these two, generally this e-voting facility is applicable for listed companies and companies with at least 1,000 members. Admin, please go to the next slide. Considering the provisions of the Companies Act 2013 and the continuing restrictions on the movement of persons, MCA through its circular of 5th May has allowed companies to conduct AGMs through video conferencing and other audio visual means during the calendar year 2020, of course subject to the fulfillment of the regulations. In addition to the requirements mentioned in 5th May circular, companies are required to comply with the framework provided by MCA for conducting EGM through the circulars of 8th April and 13th April, because that has been already been covered in the earlier circular itself. So now we are summarizing it into two different categories. One, companies with e-voting facility, listed company, companies having at least 1,000 members. Second category, without e-voting facility, that is Nidhi company and companies that are covered under that institutional investor ICDR, and companies which are having less than 1,000 members. So in these cases, e-voting is not mandatory for them. So if you look at, there are certain obligations that has been put up by MCA on the companies which are conducting an AGM without an e-voting facility. Please go to the next slide. For example, a Nidhi company should have the email address of at least half of its total members, and those members should hold shares of more than 1,000 INR in face value or more than 1% of the total paid up share capital, whichever is less. So Nidhi company should have email address of at least half of the members. Other companies having share capital should have email address of at least half of its total members, and members should represent not less than 75% of the paid up share capital. So reading between the lines becomes important here. As we go further, we find that the conditions are there laid in to comply with this. Companies not having share capital should have email address of at least 50%, half of the members. And those members should have a right to exercise not less than 75% of the total voting power exercisable at the meeting. So these conditions has to be satisfied. So please go to the next slide. So I'm just trying to give it to you in a tabular column. The procedure to conduct general meeting through video conferencing or the other audio visual means. First, I am taking up the 8th April circular and then reading it along with the aspects. So recording of AGM proceedings, transcripting becomes important here. So what is the requirement? Transcript and recording of AGMs. What will be the scenario in which there is no e-voting facility, and what will be the scenario in which there is an e-voting facility? So Act says AGMs wherever unavoidable may be held through video conferencing or other audio visual means, and recorded transcript of the same should be maintained in safe custody by the company. In case if it is going to be a public company, the recorded transcript should also be made available on the website, if any, of the company. Attendance of independent directors. At least one independent director, in case the company is required to appoint an independent director as per the provisions. At least one independent director has to attend, and the auditor or his or her representative who is qualified to be an auditor should attend such meeting through VC or other audio visual means. So what is that this is trying to say? For example, there is a chartered accountant firm called A & Co, having Mr. A and another person as partner. For example, A has audited that company accounts, and he has got some other pressing commitment on that particular day. Could be an hearing of income tax or something like that, and in case if he is not able to attend, or if he is pushed to attend some other general meeting on the same time and date, in that case he can represent, he can put another person in his place, so that who also has to be a qualified chartered accountant. That's what we are trying to understand from the clients. They can attend the meeting on behalf of that original auditor. So if you look at what is there any relaxations for a company without e-voting facility? No. Whether it is with e-voting facility or without e-voting facility, this has to be followed. So please go to the next slide. Now MCS says when you are conducting meetings, sometimes it may so happen that members may be falling under different time zones. So if members are falling under different time zones, the convenience of the person at various time zones has first to be considered before scheduling the meeting itself. So whether it is with e-voting or without e-voting, company has to first adhere to this. Where people are falling under a different time zone, that convenience should first be considered before scheduling the meeting itself. The attendance of members through video conferencing or other audio visual means should be counted for the purpose of quorum under 103. So it's the same requirement for e-voting facility also. So what are the prerequisites for an video conferencing or other audio visual means facility? Meeting that are held through video conferencing should allow two-way teleconferencing or WebEx for ease of participation of members. So there should be two-way communication and not one-way communication. And with e-voting facility, where there are more than 1,000 shareholders, the facility should have the capacity to allow 1,000 members to participate on first come first served basis. Where there are more than 1,000, we are going for an e-voting, and they should at least provide for 1,000 members to participate on first come first serve. In case the first 1,000 is filled up, people, if the system does not allow people, then it is not any non-compliance. Whereas in the case of without e-voting facility, we are understanding that the number of members is less than 1,000. So this has to provide for allowing 500 members or all the members of the company, whichever is less. to participate on the first come, first served basis. So we understand that it has to be a two-way communication, not one way, and it should facilitate participation of people of 1,000 in one case, and in another case 500, or all members, whichever is less. So please go to the next slide. Who are exempted on this first come, first served principle? Sorry, I have to participate in the meeting 100%. If I'm joining subsequently because of some technical issues, and if I'm not able to make it within the first 1,000, and if the system doesn't allow me to enter into it, so is there any thing that can be done for people? So the circular says, following are allowed to attend the meeting without restriction of first come, first served. In case somebody has already entered, and if the number is up, system is not permitting, you have to pull out somebody else and then allow these people inside. Large shareholders holding 2% or more of shareholding, promoters, institutional investors, directors, KMP, chairpersons of the audit committee, nomination remuneration committee, stakeholder relationship committee, auditors, etc. And wherein in a system of without e-voting facility also, the same provision is applicable, no change. So the exemption from first come, first served principle is there for all these people, and they are at any given point of time entitled to get inside the meeting. So who to move out is a point of big question, and shareholders may not be ready to move out. So it is better all these people log in at the first instance itself to avoid these kind of complications. Please go to the next slide. So who will be the chairperson of the meeting? Chairperson should be appointed for AGM as per the articles. Agreed. In case where articles is silent, how to appoint? Where there are less than 50 members, the chairperson should be appointed in accordance with 104. So in all other cases, chairperson should be appointed by e-voting. Agreed. In the case of without e-voting facility, should be appointed by poll through email. The question is, when will this happen? When will this happen? Maybe after the meeting starts, or how it is going to happen is something which I am not able to understand. Probably learned members can throw light on this. So chairperson should be appointed by poll through email. So meeting, only after coming to the meeting, we will understand which directors are there, who can be elected as the chairman of the meeting. Then in that case, to appointing him through poll, I think it might be time consuming. Not sure, probably, since this is the first time we are experiencing this. Probably it could even be a smooth cakewalk. We are not aware. From looking from here, we are not able to comprehend exactly how things are going to be there. So please go to the next slide. Now here I am trying to consolidate the aspects of the 5th May 2020 circular for the annual general meeting during the calendar year 2020. So the circular clearly says what types of business can be transacted. Only those items of special business which are considered to be unavoidable by the board will be transacted in such meetings. So this is same for both the cases. I was surprised to read the next box. Sending of financial statements by email. For your convenience, please permit me to read it. In case of difficulty involved in dispatching of physical copies of financial statements, including board's report, auditor's report, etc., such statements should be sent only by email to the members and to all other persons entitled to. All other persons includes directors, auditors, etc. Say, for example, if the scenario is such that we are living in Chennai or Mumbai, where we come across the numbers of the COVID is increasing, and there is a difficulty in dispatching of physical copy, I need not send physical copy, and it is enough if it is sent only by email. So this is the requirement which is applicable even for company without an e-voting facility. So, for example, now you see Coimbatore has opened up. Things are getting normal in the days to come in Coimbatore. So, if postal and other facilities are working, then we need to dispatch it, no doubt. The circular says only in the case of difficulty involved in dispatching. If there is no difficulty and life has become normal in green zones, they can very well dispatch it by post. Please go to the next slide. And we have one more compliance to this. Public notice before sending financial statements. Before sending financial statements, a public notice by way of an advertisement to be published at least once in a vernacular newspaper and in English newspaper, specifying the requisite information of the AGM, that is date, time, through VC or audiovisual means, the manner in which persons who have not registered their email address with the company and how can get the same registered with the company, manner which members can give their mandate to receive dividends directly in their bank accounts through ECS mandates. So in case of without e-voting facility, this notice need not be given. So there is an exemption given for company which are conducting AGM without e-voting facility. There is no need for public notice in newspaper. Okay. How to obtain email IDs of shareholders? Because already there is people are there. They are already there in the e-voting facility. So majority are already there on the general meeting. So I need not now go and obtain the email ID of shareholders where I am conducting a general meeting through e-voting facility. Whereas if I am not having an e-voting facility, I should take steps to get the email address of all the persons who have not registered their email address with the company or the RTA. So this is an additional task that is coming for companies that are having less than 1,000 members or Nidhi company or those whatever category I was telling to you earlier. So this is an additional activity where the email ID of shareholders are have to be obtained. So in one case, one is taking advantage. In another case, the other one is taking an advantage. So only time can tell which is more advantage. Please go to the next slide. On the payment of dividend part, in case company is unable to pay dividend to shareholders through ECS mandate due to non-availability of data, etc., then it can be done after normalization of postal services by dispatching a warrant or check to the shareholder by a post. So normally it has to be done through ECS mandate. In case if there is not available, data is not available, then we need to wait till the postal services becomes normal, and then we will issue a physical warrant or a check. On the cases without e-voting facility, members should be allowed to give their mandate of ECS or any other means. In case a company is unable to pay the dividend to any shareholders by electronic mode due to non-availability of ECS mandate details, the same should be paid after normalization of postal services by dispatching the dividend warrant check to such a shareholder by post. So both the scenarios you will find, either pay it now if possible, or later on you can do it when the scenario becomes normal. Please go to the next slide. In a case where company gets permission to hold AGM at the registered office, because where people have to travel and come to the registered office and then to attend the meeting, because there are less number of shareholders and their scenario is different. So in that case, provide the facility of video conferencing or other audio visual means so as to allow other members to participate in such a meeting. So other members has to participate. People have come by physical presence, that's different. But other members who are not able to participate, Now they would be given an option to participate. All members, whether physically present or through audiovisual means, should be considered for the purpose of quorum. All the resolutions should be passed through the facility of e-voting system. So the physical members are there, but still resolutions should be passed through the facility of e-voting system. Whereas in the case which a company doesn't have the e-voting facility, they need not follow these regulations for them. So I was just trying to consolidate the few aspects on this part, which normally I think we'll be able to comprehend much better only when the scenario turns in the days to come, and all our practical difficulties are taking a back seat, and we'll come to understand how far we will be able to do it practically. What are the initial teething troubles that we'll be having on all these things, etc. Please go to the next slide. So now, when I'm trying to cover the other aspects, MCA requires that every company that conducts AGM through audiovisual means or video conferencing to ensure that all other compliances associated with the provisions relating to general meeting, such as making of disclosures, inspection of related documents registered by the members, are as provided in the Act and articles are adhered through electronic mode. Normally, how we start recording minutes of the company on the general meeting, the registers and records were kept open for inspection by the members throughout the meeting. That is the first line. Normally, we record after the attendance part in the AGM minutes. So now, when we are conducting this through an electronic mode, Act, the circular says, this disclosures, inspection of related documents registered by members should be adhered through electronic mode also. So whether we will take it and display before the camera, or whether we will place those records registers on a table and then move a camera on that and then say these are the registers record placed for the information. So all sorts of imagination was running to me when I was reading these circulars for the first time, and things are just trying to get settled amongst me when I'm trying to discuss same with my professional friends, how these disclosures can be done through electronic mode. So my people are working out various methods and will be very well adhering to the MCA circular before the annual general meeting, that is for sure. That too in a very comfortable manner we'll be able to do it. So again, MCA says, in case companies which are not covered by the circulars and they are also not able to conduct the AGM through VC or other methods, they will have to make an application for extension of AGM at a suitable point of time before the respective ROC. Under 96. 96 talks about annual general meeting of companies, 2013. So they have to apply to the ROC and then seek for an extension of the AGM at an appropriate time. So the word extension of time at a suitable point of time itself indicates that we need not wait for the fag end of the day and then go for an extension. If you feel that it may not be possible to conduct AGM in the COVID scenario, you may ask for an extension through ROC and then conduct the AGM. But we are not sure when we will come out of the COVID-19 scenarios. So what extension I will be asking, how long I can ask, or till how long ROC at least can approve this, it's all practically debatable. For example, I may presume personally that it may take another 2 months. Somebody may presume it may take another 3 months. So what is the extension time to apply? That is still remaining as a big question mark on this. So having discussed about the various MCA circulars on this, I am now moving my attention to the SEBI relaxations. Please go to the next slide. I am talking now, trying to consolidate the SEBI circulars dated 12th May, where they have come up with details similar to MCA. And what are the relaxations that we find in accordance with SEBI circulars? The first point, listed entities are required to send a hard copy of annual report financial statements to shareholders who have not registered their email address and hard copies who request for the same. This is a regulation. Relaxation, this requirement has been exempted for listed entities who conduct their AGMs during the calendar year 2020 till 31st December 2020. So what a very welcome measure by SEBI on this part, really appreciable. Listed entities are required to send proxy forms to holders of security in all cases, mentioning that the holder may either vote for or against a resolution. Relaxation, this requirement has been exempted for listed entities who conduct AGM during the calendar year 2020. So it is really happy to read all these kind of relaxations that the government of India has given through SEBI notifications. Please go to the next slide. Listed entities required to send payable at par warrants or checks by speed post in case amount payable as dividend exceeds 1,500. The relaxation is get the bank details of shareholders and use the easiest mandate to pay it. In case it is not available, in case it is not being done, then wait for the scenario to turn normal. Till postal services resume, you need to wait and then pay it up. Listed entities are required to publish an advertisement in newspaper for certain events such as financial results, notice of board meeting to discuss the financial results. The relaxation is this requirement has been exempted till 30th June 2020. So no need to give newspaper advertisement or give the financial results. So this is again a welcome measure of relaxation. Please go to the next slide. Listed entities which with subsidiaries are required to submit the cash flow statement quarterly, year to date as per GAAP. Currently, Ind AS is applicable to all listed entities with the exemption of those in banking and insurance, since the date of implementation of Ind AS is yet to be notified. So the relaxation provided by SEBI here is listed entities which are banking, insurance companies or with subsidiaries may submit cash flow statement results for quarter ending 30th June on a voluntary basis, not mandatory, voluntary. However, they should continue to submit standalone financial results. So please understand. So only those subsidiaries and that entities which are covered, listed entities with subsidiaries who are required to submit quarterly year-to-date cash flow alone has been exempted. Standalone financial statements has to be submitted. If such listed entities choose to publish only standalone financial results and do not publish cash flow statement, they should give reasons for the same. Why it has not been adhered to. The reason for the same should be given. So these are the relaxations that SEBI has given on this COVID-19 scenario. And we are happy that the government of India has been taking lot of steps for ease of doing business on the scenario of pandemic, where movement of people have come to a standstill. But the government feels very much that business should keep going on and has given lot of relaxations both from MCA side as well as from SEBI side. Admin, please go to the next slide. So regulators have been providing various relaxations for Indian companies considering the difficulties due to the COVID outbreak. The recent clarification and relaxation issued by MCA and SEBI are timely as companies are in the process of finalizing their financial statements for the year ended 1920, and they will be planning to hold their AGMs. Enabling meetings through video conferencing or other means other than physical presence would help companies to hold AGM and EGM and to take critical decisions in due time. For effective participation, companies need to ensure that they are well equipped to conduct AGM through video conferencing or other audio visual means. So this, I like to underline this. Also, companies should ensure that the proceedings of the meeting are duly recorded. Adequate measures have been taken to safeguard the recorded transcript of the meeting. So though there is a relaxation on one part, there is an obligation on another part to record it and to safeguard the transcription of the meeting. So moving forward to the next slide, companies should have to comply the manner and mode of issuing of notice to members as specified in MCA before convening of the general meeting. Normally notice will be issued. However, difficulty may arise for companies who have already sent their notices for calling AGM. Company have already sent the notice. So what to do right now? Such companies would be required to send fresh notice. Please note, such companies would be required to send fresh notice containing the revised information that AGM would be conducted through video conferencing or other audio visual means as per the MCA circulars. So considering the measures to address the pandemic, such as lockdown and restriction of the postal services, the regulators have relaxed the requirement of sending physical copies of vital reports like financial statement, board's report, auditor's report, etc., and can be sent by email to persons who are entitled to receive those reports. Further, MCA has provided an option to companies with 31st March 2020 year end, which are unable to conduct AGM through physical presence. They can make an application to ROC for extension of AGM timeline, which I was talking to you some time back. So they can apply for an extension and then conduct the AGM accordingly. So when I have been talking about all these things, there are some other aspects where I would like to throw light upon on the certain MCA updates. Please go to the next slide. So there is an extension of interval between two board meetings. Normally, we are aware, Companies Act, read along with the secretarial standards, says the gap between two meetings should not exceed 120 days. However, there should be one meeting for every quarter. So the relaxation is the conduct of board meeting by companies within the interval of 120 days is now extended by further period of 60 days until the next two quarters only, that is till 30th September. The gap between two meetings can be 120 days plus 60 days. Normally, you are aware, independent directors should hold one meeting at least in a year. And now that provision has been relaxed. Section 4 is not considered to be violated if independent directors could not hold their exclusive meeting during financial year 1920. Because many people normally plan for board meeting end of March. So lockdown has come into force on the last week of March. So a relaxation has been given on this part. Resident director concept has been brought inside Companies Act 2013 as recommended by J.J. Irani Committee. So the J.J. Irani Committee has been instrumental in bringing the concept of resident director under the Companies Act 2013. So the MC update says that resident director may not be able to comply with minimum 182 days stay in India during financial year 1920. It will not be treated as non-compliance. In case the director is not able to comply with 182 days, then it will not be treated as non-compliance. So that is the relaxation that we find in over there. Please go to the next slide. Registration of independent directors. MCA has extended the last date to register for existing independent directors with the data bank by up to 30th June 2020. Previously, it was 30th April 2020. So the extension has been given in this. The most energy giving update what I will find is additional fees waived. There will be a moratorium from 1st April 2020 to 30th September 2020 on levying any late additional fees upon filings of any return statements documents. So whatever I am supposed to file from 1st April, I can have a waiver of the additional fees till 30th September 2020. The newly incorporated companies will get additional 6 months for filing the declaration form for the commencement of business. Please go to the next slide. Foreign investment from neighboring countries, including China, will require government approval. What is this? Earlier, foreign investment in India from a foreign entity incorporated, where the beneficial owner to such investment is situated in a country like Pakistan, okay, then government approval was needed to bring in their investment. Now, the earlier condition was it was only to citizens of Pakistan and Bangladesh, where you need to have a prior approval from the government. Now that restriction is extended to countries like China, Nepal, Burma, Myanmar, Bhutan, Afghanistan. So in order to increase the KYC and then find it out, it is better they come through an approval route. So foreign investment from neighboring countries will require government approval. Please go to the next slide. Deposit provisions. Companies acceptance of deposit rules 2014. A company having outstanding deposits is required to deposit at least 20% of the amount of its deposits maturing during the following financial year into a separate deposit repayment reserve on or before 30th April of each year, which we are all aware of. For the deposits maturing in the financial year 2020, MCA has extended the due date for deposit repayment reserve to 30th June 2020. So this extension will facilitate the liquidity crunch situation faced by many companies who have already accepted the deposit. Similarly, debentures. Investment of 50% of debentures maturing in a specific year in specified instruments. The requirements have been postponed from 30th April to 20th June. Next, please go to the next slide. CSR, corporate social responsibility. So, admin, when I am talking on this, please try to open a circular called CSR, PM CSR will be there. So, corporate social responsibility, contribution made to PM CARES Fund shall qualify as CSR expenditure under item number 8 of the Schedule 7 of the Companies Act 2013. As we are all aware, Schedule 7 of the Companies Act, read along with Section 135, talks about CSR. Now, the contribution made to PM CARES Fund will qualify as a CSR expenditure. This is something which is normal. So what is the special in this case? Contribution made to Chief Minister's Relief Fund will also be eligible as CSR as per Tamil Nadu government notification of 8th April 2020. Till very recently, we have heard only contribution to the central government getting eligibility to CSR. Now, the special cases, contribution to Chief Minister's Relief Fund will also be eligible for CSR as per the Tamil Nadu government notification. So if a company is spending anything towards COVID-related activities, if they are making any ex gratia payment to temporary casual workers, daily wage workers, in over and above the disbursement of wages, especially for the purpose of fighting of COVID-19, the same shall be admissible towards CSR expenditure as a one-time exception, provided there is an explicit declaration to the effect by the board of the company, and the same should be certified by the statutory auditor. So, subject to certain conditions, the company can add the ex gratia payments that is being made to casual workers into CSR. Admin, please go to the next slide. Auditor's report, CARO 2020. So, friends, when MCA had on 25th February announced the new format of the CARO 2020, for many of them it was really challenging, and we were all very much poignant as to how come we are going to comply with all these regulations in the days to come. And because the notification said that it is effective from the financial year 1920, so we were worried, so how to make it up. So now MCA has postponed the applicability of CARO 2020 to the financial year 2021. So this will significantly reduce the burden on the companies and its auditors to deal with more than the 25 additional checks that was introduced under CARO 2020. So in this case, we find that a circular has been issued that instead of 1st April 2019, it will be reading as 1st April 2020. So MCA has given a circular on this, postponing the applicability of CARO 2020, for which we are all very happy that we have been able to swim through that this year, so that we will look at it next year, just like a student who feels that the exam has been postponed right now. So please go to the next slide. DIN holders of DINs marked as deactivated due to non-filing of DAR3 KYC or DAR3 KYC web, and those companies whose compliance status has been marked as active non-compliant due to the non-filing of active company tagging identification and verification, they are encouraged to become compliant once again by circular number 11 dated 24th March and circular number 12 of 30th March. And companies are requested to file DAR3 KYC web active, as the case may be, between 1st April to 30th September without any filing fee of INR 5,000 or 10,000, whatever the case may be. So this is really a welcome measure, my dear friends. So in case if it was not done earlier, it would be suggested to carry it out at the earliest so that the compliance can be adhered to. Now I am trying to present the various period days extensions that has been given by MCA on various aspects. Admin, can you please go to the next slide? So by way of tabular column, we are trying to explain what is the issue description and what is the period of extension that has been given in this. Names reserved for 20 days for new company incorporation. Spice plus Part B needs to be filed within 20 days of name reservation is the rule. So what is the extension given? Names expiring any day between 15th March to 31st May would be extended by 20 days beyond 31st May. So additional 20 days is given from 31st May. So names reserved for 60 days for change in the name of company, INC 24 needs to be filed within 60 days of name reservation. This is law. So name expiring on any day between 15th March to 31st May would be extended by 60 days beyond 31st May 2020. So these are all big relaxations given by MCA, taking into account the present scenario. Please go to the next slide. Extension of resubmission validity for companies. SRN where last date of resubmission falls between 15th March to 31st May, additional 15 days beyond 31st May would be allowed. However, for SRNs already marked as not to be taken on record, extension would be provided on a case-to-case basis only. So names reserved for 90 days for new LLP, change of name, Form 5, etc. Names expiring on any day between 15th March to 31st May would be extended by 20 days beyond 31st May 2020. So there have been relaxations given on various aspects. Please go to the next slide. Resubmission validity extension for LLP. So SRN where last date of resubmission falls between 15th March 31st May, additional 15 days would be allowed from 31st May for a resubmission. Similarly, just like company, however, for SRNs already marked not to be taken on record, extension will be available on a case-to-case basis. Again, for extension for marking IEPF 5 SRNs to pending for rejections. SRNs where last date for filing e-verification report falls between 15th March to 31st May. They'd be allowed to file the form till 30th September. However, for SRNs already marked pending for rejection on either under Rule 7.3 or 7.7, extension will be provided only on a case-to-case basis. So these are all some of the extension that has been given on the various forms that has been already been filed, and we have been waiting to know the status, because we find that it is time that how to file it. We are coming under a lockdown scenario, how to go about it, and all these things. So these are all the general extension activities that has been provided in the MCA site itself. Whatever I am presenting, it's all there in the MCA site itself with all these things. So I thought it would be better when we read through line by line with our professional friends, so that our understanding can be much better, and that's the purpose of this webinar. Admin, please go to the next slide. I am now turning the attention to Insolvency and Bankruptcy Code. Insolvency and Bankruptcy Code, in exercise of powers conferred by the provisions of Section 4, the government specifies 1 crore rupees as minimum amount of default for the purpose of said section. Admin, if possible, open that PDF by name IBC1. If not, don't worry, I have tried to cover there in the slide itself. So earlier for IBC, when people are getting in, the limit fixed was 1 lakh rupees. The default was 1 lakh rupees. Now, the central government, via this notification under IBC, have increased the limit to 1 crore rupees. So admin has been able to open that circular, and you will find that. So the limit now has been extended, increased to 1 crore rupees. So now let us come back to the presentation, please. So in relief, in a way to give relief to the companies defaulting on loans due to COVID-19, the finance minister on Sunday, 17th May, said no fresh insolvency will be initiated for 1 year under IBC. So this is something people are talking both for and against. So some people are happy about it, some people are not happy about it. So it so happens that no fresh insolvency will be initiated for 1 year under the IBC. This was the statement given by the finance minister on 17th May. So please go to the next slide. So the Insolvency and Bankruptcy Board of India, via amendment dated 17th April, has stated that the lockdown period shall be excluded from the time limit of liquidation period. So lockdown period will be excluded from the time limit of liquidation period. So what does 44 say? The liquidator shall liquidate the corporate debtor within a period of 1 year. Please note, it has become 1 year from the liquidation commencement date, notwithstanding pendency of any application for avoidance of transactions, provided where sale is attempted under regulation 32A1, the liquidation process can take additional period up to 90 days. So a relaxation has been given in this. So it has become 1 year. The 90 days additional remains 90 days additional only. So if you look at, it is important to note that the code is being appreciated worldwide owing to the strict timelines. However, in a situation at present, where we are facing this pandemic caused by novel COVID-19, it is important to provide some way out to liquidators to carry the liquidation process smoothly. In all likelihood, liquidators would be working with limited resources due to the nationwide lockdown. Hence, the Insolvency Bankruptcy Board of India thought it fit to exclude this period from the liquidation term. So that's what it has been happening. Admin, please go to the next slide. So, exclusion of period of lockdown. 47A. Subject to the provisions of the code, the period of lockdown imposed by central government the wake of COVID-19 outbreak shall not be counted for the purpose of computation of timeline for any task that could not be completed due to such lockdown in relation to any liquidation process. Admin, if possible, please open a PDF by name IBC2. If not, also don't worry, we are trying to give more information on that. So if you could find the 47A, the newly inserted section, provides for the exclusion of the lockdown period from the timeline of the liquidation process. So the notification has come into force from 17th April 2020. 47A, subject to the provisions of the code, period of lockdown imposed by central government in wake of COVID-19 shall not be counted for purpose of computation of timeline for any task that could not be completed due to such lockdown. So this has come into force since 17th April 2020. Admin, please come to the presentation now. Thank you for opening this slide PDF. The National Company Law Appellate Tribunal, in the case of Twin Logistics India Private Limited versus Max Softtech Private Limited, while its order dated 30th March 2020, took a suo motu view towards the difficulties faced by the insolvency professionals who have been appointed as resolution professionals of the corporate debtor, and hence ordered for exclusion of the lockdown period from the timeline of the insolvency resolution process of the corporate debtor. So we are happy that NCLAT has recognized the roles of insolvency professionals that we people are playing on the NCLT on this insolvency resolution professional. And it has stated very clearly in this case, because there are professionals who are working there, they have to be given a relaxation on this. So it took a suo motu view towards the difficulties faced by insolvency professionals and hence ordered for exclusion of the lockdown period from timeline of the insolvency resolution process of the corporate debtor. So this is really a welcome measure. Now we are in a scenario where the whole world is providing some relief in some way or other by bringing in amendments in their bankruptcy laws. That is what I came to know when I was trying to read the various bankruptcy laws of various countries when I was preparing for this. It is important to provide relief for insolvency professionals as well as to lead logical conclusion of the corporate debtor through resolution or liquidation, whatever the case is. It cannot be denied that right from the commencement of insolvency process or liquidation, the insolvency professionals are bound to work on a war footing. However, in a situation like this, where the whole nation is under lockdown, it could not have been possible for such insolvency professionals to work as per the timeline, and the breaches of such timelines will be inevitable, in my view. Hence, these measures by the government are of utmost importance, and all these measures brought in by the government is really commendable, and we'll be thankful to the government for bringing all these notifications on a very, very timely manner. Moving forward, I will now be taking up on the next slide with the micro, small and medium enterprises. So what are the aspects of relaxation under micro, small and medium enterprises? The things goes like this. For the standard micro, small and medium enterprises, collateral-free automatic loans worth 3 crore will be provided, which should be for a 4-year tenure and 100% guaranteed. And 100% guaranteed. The government will facilitate the provision of 20,000 crore sub-lakh ordinated debt for stressed MSMEs who would get benefit. That will be benefiting 2 lakh MSMEs. So that is the scenario to be noted here. The government will provide 4,000 crore to CGT MSC, who will provide a partial guarantee to the banks. Banks would provide loans to promoters of MSME who would infuse them in their unit. Funds of fund will infuse 50,000 crore equity for those MSMEs who have the potential and are viable but facing shortage of equity. The corpus of fund would be 10,000 crore, which should help expand capacities and also to help them listed if they wish to do so. Please go to the next slide. So the definition of MSME has been changed so that the idea of the government is the benefit can be extended to many people so that they can grow in volume and then get the benefits. The first and foremost important point to note down here is manufacturing and services are now under one classification. In addition to investment limit, turnover limit has also been introduced. So if you could please take a close look on the slide, there is two scenarios given, the existing, revised. The existing for manufacturing enterprise investment was less than 20 crore for micro, for small less than 5 crores, sorry, for micro less than 25 lakhs. I will read it once again. For micro, for manufacturing investment less than 25 lakhs, for small investment less than 5 crore, for medium investment less than 10 crore. For service enterprises, for micro investment less than 10 lakh, for small less than 2 crore, for medium less than 5 crore. Now manufacturing and service has been subsumed and made one, and investment and turnover both criteria is given. Investment 1 crore, turnover 5 crore for micro, for small investment 10 crore, turnover 50 crore, for medium investment 20 crore, turnover 100 crore. So if I am to teach to students, how will I put this and then make students remember this easily? I'll be telling to students, please note there is a 1:5 ratio between the investment and the turnover. Hold that good for micro, small as well as medium. For micro, it is 1 crore and 5 crore. For small, it is 10 crore, 50 crore. The 1:5 ratio is maintained. And for medium, the 1:5 ratio is maintained where it is 20 crore and 100 crore. I think by this student will be able to remember very easily the 1:5 scenario, and then will never forget the investment and turnover limits where manufacturing and services have now been subsumed into one category. So anybody asks us what is the new limit, we need not worry and get puzzled. What is the new limit? 1:5. 1 crore, 5 crore, 10 crore, 50 crore, 20 crore, 100 crore. So we can easily remember this and then have an idea about what is the revised MSME classification. Please go to the next slide. Since MSMEs in India and other companies have faced unfair competition from foreign players, the next step is to disallow global tenders in government procurement up to rupees 200 crore or less than that. So this will allow MSME a chance to supply for big projects, and this will help the Make in India concept to grow much further. Looking forward, MSMEs to promote and provide e-market facilities, and also ensuring that all the dues of MSMEs are cleared by the government within 45 days. So all these things are there to bring up the MSME sector. Now I am turning my attention to EPF. Please go to the next slide. EPF. So EPF relief for all eligible establishments with rupees 2,500 crore liquidity support. Government will provide both employer and employee contribution for another 3 months, that is June to August as well. This will boost liquidity for 3.6 lakh establishment and 72.22 lakh employees. The government proposed to increase the take-home salaries for those not covered in EPF benefit. The statutory PF contribution is being reduced from 12% to 10%. For state PSUs, employers will continue to pay 12%. This will provide liquidity of 6,750 crore to employers and employees over the 3 months of June to August. So this is regarding EPF. Please go to the next slide. As you are aware, withdrawal from Provident Fund is allowed only on certain scenarios like marriage, construction of house, etc. Now, the government has felt what will happen if an employee is having a cash crunch on the COVID-19 scenario. And the government has allowed withdrawal of employees' Provident Fund in case the employees are facing financial problems due to COVID lockdown. As you are aware, many organizations have adopted the policy of no work, no pay. So naturally, some employees would have been affected by the non-payment of salary all of a sudden. So now withdrawal from PF is allowed for financial problems due to COVID-19. So what is the example that I'm trying to put there? For example, your last done basic plus DA is 30,000 and you have an EPF of 3 lakh balance in your account. Then you are eligible to draw lower of 3 months of basic DA, that is 90,000, or 75% of the EPF, that is 2,25,000. So least of the above is 90,000. So you are allowed to draw 90,000 in this example that I have provided. So PF withdrawal is allowed to meet with the financial problems relating to COVID-19. Now, moving my presentation to the next slide, I'll be talking about NBFC, housing finance companies, and microfinance institutions. The government proposed to launch rupees 30,000 crore special liquidity scheme where the government will buy investment grade debt papers of NBFCs, housing finance companies, and microfinance institutions. These securities will be fully guaranteed by the government. These NBFCs which do not have high quality debt papers can now support MSMEs dependent on them. Also, proposed rupees 45,000 liquidity infusion through a partial guarantee scheme which will cover commercial papers and borrowings. The first 20% loss will be borne by the government. AA rated paper and unrated papers are also eligible. That is the point to be noted here, because people may have a doubt that whether only AA rated papers are eligible here. No, the government has given an exemption. AA rated paper and unrated papers will also be eligible in this case. So closing on NBFC, I now move to foreign trade policy. The foreign trade policy, as you are aware, is issued once in every 5 years. The foreign trade policy, which was last issued, was 1520. The handbook of procedures was valid till 31st March 2020. And that has been now extended by 1 year till 31st March 2021. So the foreign trade policy, which was supposed to expire by 31st March 2020, will now be valid till 31st March 2021. Next, the export obligation period, which are expired or expiring between February to July, they have been extended by further 6 months from the date of expiry. And in case of RCMC that is expiring during the COVID scenario. It has been decided that the regional authorities of DGFT will not insist on valid RCMC, wherein it has expired on or before 31st March from the applicants. And those will be treated as valid till 30th September 2020. So again, relaxation has been given on this part. Please go to the next slide. Service exports from India. The last date for filing annual claims under service exports from India is 12 months from the date of relevant financial year. And now this has been extended to 31st December 2020. Merchandise exports from India scheme, where last date for filing the claim is 1 year from the late export order date, and another 2 years beyond that with an imposition of a late cut. So the last date for filing without the late cut, which will be expiring on or after 1st February, on or before 31st May, has been extended by 3 months beyond the expiry date of the initial 1 year period. So rebate of state and central state taxes and levies. The last date for filing of rebate of state and central taxes and levies claims for export shipments between 7th March to 31st December has been extended to 31st December 2020. Moving now to special economic zone. Facilities for special economic zone units. There are certain returns reports to be filed in respect of SEZ developers, co-developers. Relaxations have been allowed on the following compliance for 1 year. Requirement to file quarterly progress report attested by independent chartered engineers. Softex form is the form that is filed by IT and IT enabled units. The filing of annual performance report by SEZ units. All these things, relaxations have been given for a period of 1 year, which is to be noted. Moving my presentation now to ECGC, Export Credit Guarantee Scheme. If you could look at the time for filing various returns has been extended to 31st May. The time for filing claim reply extended to 30th June. Waiver of credit limit application fee till 30th June. Reduction policy proposal by 50% between March to June. Discretion to decide about shipments that reach destination but not cleared by overseas buyers in the destination countries. Claim eligibility under insurance cover reduced from 4 months to a period of 1 month. Because if you could look at people like us are having a lot of imports as well as exports, it so might happen that the goods would have reached the ocean, crossed the ocean and would have landed in any of the ports. And ports were working during the COVID lockdown on certain emergency activities, and they were carrying out certain activities. When I checked up with friends on the logistics who are on the port activities, they said that we are working because some of our services continue to be essential. So that being the scenario, when the goods have reached, we are under dilemma whether to bring it inside or not. Similarly, our customer also has this situation outside India. Whether I can take those goods, what will be the scenario if I take it or if I don't take it? What all I can fumigate the goods that has come in? How I can ensure that it is not free of COVID? So a lot of difficulties are there. So discretion has been given either to resale, re-import or abandon for the goods that has reached the destination. So that is the point to note here clearly. I am now moving my presentation to RBI initiatives. RBI has reduced the repo rate by 75 basis points to 4.4%. As you're all aware, on the various news channels and other things talking about moratorium of 3 months of EMI on all outstanding loans have been announced. The in-COVID emergency credit line for large corporates will provide additional funding of up to 10% of the working capital limit. That includes fund-based as well as non-fund-based. Will have a tenure of up to 60 months, and there will not be any processing fee on this. To support the women workforce, bank has launched self-help group COVID Sahaya loan. Under this, each member can avail a soft loan of 5,000 to a maximum of 1 lakh. The loan is for 36 months with 6 months moratorium. And many banks are trying to follow this and then announcing special emergency credit line in the days to come. Next, on the RBI initiative, please go to the next slide. Now, FEMA says, when I make an export, I have to realize the export proceeds within 9 months from the date of export. So when I am making export, RBI has relaxed the provisions for realization and repatriation of export proceeds from 9 months to 15 months from the date of export. So FEMA clearly says that I have to realize and repatriate the export proceeds 9 months, within 9 months from the date of invoice. If not, I'll come under caution list, then I'll come under blacklist, and I will not be able to either import or export. Sorry, only export. There is separately another activity for import. So people in the profession are very much aware about EDPMS and its closure, where we have been working on several years to close the various export outstanding, wherein many corporates have been categorized as first they have started as caution listing them, then slowly they will be blacklisted and they can't export. Similarly, you have this kind of thing for import also, but that did not come into force very effectively as EDPMS. So now the time for realization and repatriation of the export proceeds has been increased from 9 months to 15 months from the date of export. This relaxation has been provided for exports up to 31st July 2020. So by the time when this notifications and all came, we were not sure how long the extension or lockdown will be there. Because when these came, we were under 1.0 or 2.0, and today we are sitting at 5.0. So I think shortly government will try to revise all the dates given therein, and we may expect some more relaxation on the dates on these aspects. Moving now my presentation to tax reforms. Not to talk about tax reforms to chartered accountants, because you people would have already made an extensive study on all these things. But since I thought I'm making a presentation on the various regulatory reforms on COVID-19 scenario, I thought it would be appropriate to touch upon the various aspects, though I'm not going to deal in detail on that part. So please go to the next slide. So in order to provide more funds at the disposal of taxpayers, the rates of tax deduction at source for non-salaried specified payments made to residents and rates of tax collection at source for specified receipts shall be reduced by 25% of the existing rates. Payment for contract, professional fees, interest, rent, dividend, commission shall be eligible for this reduced rate of TDS. This reduction shall be applicable for the remaining part of the financial year 2021, that is from 14th May 2020 to 31st March 2021. This measure will release the liquidity of 50,000 crore. The other direct tax measures, all pending refunds to charitable trust, non-corporate business professions, including proprietorship, partnership, LLP, shall be issued immediately. Due date of all income tax return for financial year 1920 will be extended from 31st July and October to 30th November. Tax audit from 30th September to 31st October. The date of assessments getting barred on 30th September extended to 31st December. And those getting barred on 31st March will be extended to 30th September 2021. The period of Vivad Se Visa scheme, which was launched, now the period of that for making payment without additional amount will be extended to 31st December 2020. Please go to the next slide. So on the 80G benefits, 100% deduction for donation made to PM CARES Fund under Section 80G is there. On the 80C investments, now the investments can be made up to 30th June. People who have missed the bus of 31st March, now you have time till 30th June to make your investments in LIC, PPF, NSC, etc. So don't miss it out. You still have 1 month time. to claim the deduction under these sections for the financial year 1920. Please go to the next slide. On the capital gains part, the date for making investment, construction, purchase for claiming rollover benefit under 54 to 54 GB of the IT Act has been extended to 30th June. So all these things has been extended to 30th June. Sabka Viswas legacy dispute resolution, the amount payable under the scheme has been extended till 30th June 2020. So please go to the next slide. Non-payment of income tax. It has been provided that reduced rate of interest of 9% shall be charged for non-payment of advance tax, TDS, TCS, etc., which are due to be paid on 20th March, and they can be paid till 30th June. 30th June. The date for passing order or issuing notice has also been extended to 30th June. SEZ units date for commencement of operations for claiming deduction under section 10W of the IT Act has also been extended to 30th June for the unit which received necessary approval by 31st March 2020. Please go to the next slide. A special fund, Prime Minister's Citizens Assistance and Relief in Emergency Fund, PM CARES Fund has been created. The donation made to PM CARES Fund shall be eligible for 100% deduction under 80G. Further, the limit on deduction of 10% of the gross income shall not be applicable for donation made to PM CARES Fund. The date for claiming deduction has been extended up to 30th June. The donation made till 30th June shall also be eligible for deduction for the financial year 1920. So all these things will go a long way for all the people to take benefits that has been given by the government. So please go to the next slide. Normally, whenever we teach, we take into account the students' mindset and then say, can I have a glimpse of the rates and reductions? So this slide will tell you a glimpse of interest on delayed payments, which was originally 18, revised to 9 up to 30th June. Interest on delayed payment on TCS, originally 18%, revised to 9 up to 30th June. Revised return, belated return, again can be filed up to 30th June. Advance tax, the interest on delayed payment is 9% up to 30th June. Aadhaar PAN linking can be done till 30th June. Any other dues, anything can be filed up to 30th June. Refund up to 5 lakhs are being immediately released. Withholding tax certificate, the validity has been extended and it can be done up to 30th June 2020. So on one glimpse, we understand that majority of the provisions relaxation has been extended till 30th June. From a student point of view, to remember will be like it has been extended till 30th June. Please go to the next slide. The last date for furnishing of returns on the central excise due in March, April, May has been extended to 30th June. Wherever last date for filing of appeal, refund, everything which is falling between 20th March to June has been extended to 30th June. So wherever it is falling from 20th March, the last date will be 30th June. So Sabka Viswas, as I told you already, has been extended to 30th June for people to get their disputes resolved. Please go to the next slide. Again, a glimpse of various original dates and revised dates. So GST payment date, which was falling on 20th April, will now be 30th June. The monthly return 20th April will be now 30th June with no fine, no penalty, late fee. Again, the payment date for GST, which was on 20th April, will now be on 5th May with no interest payable. So GST on revised date, interest payable on late payment will be 9% instead of the original 18%. All this relaxation will be provided up to 30th June. Customs, please go to the next presentation. Relaxation has been given of the demurrage charges and the ground rent during the lockdown period. Based on the feedback from field formations, a circular under section 143AA of the Customs Act has been issued to facilitate trade by relaxing the requirement of furnishing bonds prescribed under various sections of the Act. So Customs Act has also given a relaxation from the furnishing of bonds that has been a provision prescribed under various sections of that particular legislation. Again, please go to the next slide. On the nature of compliance, whatever it is, whatever is falling between 20th March to 29th June, everything gets postponed to 30th June. That's a one single line story for this slide. So if you could look at whatever is falling between 20th March to 29th June, everything can be due dates extended to 30th June or such as a date after 30th June as may be notified. So the government is also mentally prepared for all these kind of things, and all the relaxation has now been extended till 30th June. Now moving to the next slide, talking about ESI contribution. The government now has given more time for ESI contribution. The government has given employees and employers more time to submit their monthly insurance contribution by relaxing provisions of the Employee State Insurance Act in view of COVID-19 outbreak. The ESI contribution for the month of February and March can be filed and paid up to 15th April and 15th May instead of March and April. So relaxation, that part has also been given. So my idea of presentation was to start somewhere at 4 o'clock and then close by 5:45, so that we can have exchange of thoughts among professional friends, and then we can have a deliberation and understanding of that. Admin, I request you to one more time press the arrow key for the current slide. So the idea was to have a open house for next 15 minutes. Please go to the previous slide. We'll have it in open house before we close it. So the house is now open for discussion. Does it mean all records should be scanned and a soft copy should be visually available for members joining through agent? That's what I interpret as of now. Probably we'll just again get views from few more experts and then conclude on that part. As of now, my understanding is same with you. So there was one audience question asking, does it mean that all records should be scanned and soft copy should be visually available? So yes, as of now, it is yes. We have to wait and watch. First time a PF amount can be withdrawn without any evidences. Employees need not prove their financial crunch to employer with documents, because probably it's an understanding that there is a financial crunch amongst employees. So they can use this opportunity saying that there is a liquidity crunch and they can withdraw amount from PF. Of course, many employees did not withdraw the PF money because they think it is their retirement savings which fetches best returns from government. Of course, PF, the interest rate is really good and it's better to stay back rather than not to withdraw. Even if you are planning for some funds, you can withdraw from other sources and not from PF, because in my view, the interest rate is really good. What about the change of due date under 43B of IT Act for ESI? I'm yet to look at it, sir. Sorry. I'll again dive deep into it and then I'll come back to you personally. Do we have to file DIR3, DP3 and other such annual forms? You please go ahead with your normal business filing of forms. That's what we have done on all cases, because for 31st March, when we have been conducting the board meeting, we had to reappoint the cost auditor, independent, internal auditor, etc. And those compliances, we didn't wait as such because majority have been working from home. And then we thought it will be better to file it. If and when you are able to file it, please do it. That's what MCA is also saying in this case.
I think there will be no questions, is it, sir?
Hope so. Nothing popped up till recently. But I was not able to be precise to Ramji sir's question, and my apologies on that. I'll still have to look at that exactly, and I will talk to him on a personal note.
Okay, sir. Okay, right. So we'll go for the vote of thanks, Chairman.
Yes, sir. The secretary will propose the vote of thanks.
Very good evening to all. It gives me immense pleasure to propose the vote of thanks for the first webinar of Coimbatore branch of ICAI. Members, this seminar will be the unsuccessful CPA program. You can apply to get the unsuccessful CPA credit. We are planning to conduct a structural CPA program with the help of ICAI in this near future. Our branch will be the host branch. My special thanks to the speaker, CSG Balasubramanian sir, who has accepted our invitation to address before the members. Sir, you have covered not only the company sec, you have covered all the present scenarios, sir. Thank you so much for your addressing to our members. Thank you so much.
Thank you, sir. Thank you.
I thank all the members who participated in this seminar. I thank you so much. I thank the branch admin who has organized this webinar. Thank you all. Thank you so much.
Thank you, sir. Thank you very much.
Thank you. Thank you. Bye now. We'll catch up soon.
Thank you. Thank you. Sir, the vote of thanks by NVP is completed, and I thank to all the participants who come under the web seminar series. In future, we will arrange the structural seminars with the help of ICAI. Our branch will be the host branch. Thank you very much for all. Thank you.